Hello one and all, welcome to another video. Today I thought I would do a slightly different take and I'll do a post-analysis of the 1 minute method or the quantum method, whichever one you want to call it. It was a very successful day with a series of 10 trades built up over a period of around about 45 minutes, and then we exited at a good level. What I just want to do is, let's just first of all look at the 15-minute chart of the Australian dollar versus the US dollar. So this is where price began to trigger some trades on this candle, on this particular candle here. But you'll notice the cam level, if you're not familiar, it's a fantastic pivot point indicator and one of the strongest areas that I can think of to place or generate trades around. So we can see that was at 74.31 rounded up. And you can see price yesterday went through it and then kind of went a little bit higher and then came down. If we just zoom out a little bit more to a 1 hour chart, so sorry, let's go to a 4 hour chart, you can kind of see that, wow, that's an isolated high up there, and with good reason for that. Was the last kind of a pin bar here, another one here. Price initially had a small bounce there and then broke down. So it's a good area to be looking at for trades, and I would still classify the Australian dollar in a downtrend. It's still getting beaten up by the US dollar somewhat. It has had a small bounce off the lows of the low 73 area up until where we are now. It's had about a 100 pip bounce so far. So just reverting to the 15-minute chart, you can see price escalated higher here and then had some good interaction with the cam level and started to come down. So if I now go back to the 1 minute chart, I started to build my orders up in sequence of trying to get my trades on closer to the cam level as possible. You can see here, these were the initial trades that I initially missed. I was doing something else and missed the initial entries, but thankfully price hadn't gone lower, so it still gave me a chance of first putting my first trade on there, and then I just essentially, as I say, I built my trades up. This was interesting here. I'll get my crosshairs up. You can see here at the Murray Math level of 74.22, I placed a trade there, and then I left it 3-4 pips before I did another entry, as I felt if it's going to break this level, it's going to cleanly break it. I didn't want to keep on adding positions at the same level. So I staggered my entry of 1 pip gap here of 3 trades, and then I left it at 1.5 pips to there, and then, as I say, based my entries on here, and this was where price peaked right up here at 74.35 was my last entry, and I picked this level for an exit at 74.16 just simply because it was the as you can see here, it says major support resistance for the Murray Math level. It's not necessarily a major support, it's just that's because I'm looking at such a small time frame, but you can see price has had some interaction with that level, so it seemed a good exit. Also, it was also the area of a 10 pip profit per trade. So 10 trades, 10 pips, that's 100 pips profit for the day. So that's a good morning's work for the Asian session. Any questions, just let me know.